my biggest trade that is only second to silver. So we have a real T-Rex of an HVF on silver with that spans basically since 1980, its highest point to today. That is, we feel, is in a breakout and can be happening right now. So that's one of the biggest and best trades. We've told you $333 is the next resting point. There will be a pause maybe at 90s just before you hit triple digits, but you will then go fall from there. And we see single digits on gold silver ratio.
Now, I do think silver could rally to like 61, 71, potentially actually blow off into the 80s. $80 per ounce over the next 1 to 3 months. I think it has this potential to go parabolic, but I never have factored in this cup and handle pattern. If you want to be really bullish, which is generally whoever's looking at this for silver, that could give you this pattern could give you a $150 to $200 silver.
Silver is entering one of the most significant breakout phases in decades, driven by structural scarcity, multi-cycle compression, and an expanding wall of industrial demand from AI, electrification, and solar infrastructure. After years of congestion around the mid-50s, the metal is beginning to express the kind of volatility expansion that historically precedes rapid multifold revaluations. This setup reflects the end of a 50-year horizontal range and the beginning of a new pricing regime. Francishunt, known for his HVF methodology, and Chris Vermeulen, a respected technical strategist, highlight how silver's tightening structure now mirrors classic multi-decade coil formations seen in past commodity supercycles. Their view points toward initial targets in the 90s, followed by pauses near the early triple digits, before the market drives toward deeper objectives in the $150 to $200 region. The broader pattern ultimately extends toward the $333 level, marking a full repricing of decades of suppressed volatility. Similar to copper's and lead's explosive breakouts after long consolidations, silver now appears poised for a violent revaluation, with miners positioned to outperform as capital rotates into monetary assets. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
If I may, I'll jump straight to the charts because we haven't done a proper chart share, and that's the sniper. That's what we do, literally. And the first chart I'm taking to you, especially given the amount of time, is the silver one. This is a very, very powerful chart. So I want to say something to you. You are busy watching the generational breakout. I'm the guy that said the Lionel Richie song once, twice, 3 times, and then you get your lady. Okay, that was his famous romantic song. Not a fan, as I said. Tool suits my needs far better than Lionel, but nonetheless, this. Many people, when we were trading 54 up here, were saying that's it. We are into the rip, and I said we expect one more rejection at the mid-50s range. You were rejected at 50 in 1980. You were rejected at 50 at 2011, and you're going to get at least that. You were rejected again at 2021. I think it was 2021, and now we await. My apologies. It's now rejection now at 2024-5. So I should get the macro up because I'm tripping over my feet here. You had 2011, and let me change this one. This one's actually got my broker on. We're heavily long with all our trades there, as you can see. So the monthly one, let's get 3 months up for quarterly. So we get it all in. These are your rejections at the 50 level. 1980, and then again at 2011. And then for us, you've been in a breakout since you broke that green line. Let me just remove some of my annotations. It's kind of a busy chart. So we said you'll probably get one more rejection, but it'll be very small. That rejection, in our opinion, is quite possibly happening, and it was very small. It's literally this. So I've gone from that 3-monther down to here because of supply situation. So you are in a winding up for us HVF setup, which is a volatility squeeze. Most of the squeeze is from below, like that. And that was your third rejection. And here comes your lady. That's the move that we suggest is now going to take you into the 90s, which is our interim level target. Just before, you might technically run the 3-digit, do a technical run and reject at the hundreds, somewhere in the hundreds. You'll pause there for a while. That's going to take a lot of people, a lot of getting used to, and industry and pricing. Think of what that does to solar panels and a lot of industries. And then again, you will surge through the 333 target, and I would expect a pause again there. Don't forget, that's a third of the way to 1,000. And we see 4 digits and single digit gold-silver ratio as an overreaction to the downside on gold-silver. So the key trade right now, gold good, silver amazing. Silver absolutely amazing. So with that 2 minutes, that's where I would take you. I don't want you guys to miss it. My biggest trade that is only second to silver. So we have a real T-Rex of an HVF on silver with that spans basically since 1980, its highest point to today. That is, we feel, is in a breakout and can be happening right now. So that's one of the biggest and best trades. We've told you $333 is the next resting point. There will be a pause maybe at 90s just before you hit triple digits, but you will then go 4 from there, and we see single digits on gold silver ratio. Well, the other let's just say blue whale of a HVF, and we are the advocates of HVF method and the founder and originator, is the USD Korean won, which has as its high point and the beginning of the pattern the Asian market collapse of 1996. So it's only just a little bit younger, and we have a huge loss of value in the Korean won. And the Korean won is kind of like a funding currency like the yen, but the difference is when it goes into contagion spills. So there is a little bit of a carry trade to it too. But more importantly, their stock market, the NASDAQ, is up 18% year to date, mainly on AI, by the way. The 80% of the SP 500 is actually down on the year. But if you look at the KOSPI actually has gone up 73% year to date. And since the Trump's tariff tantrum, when there was a bit of a wobble, it actually has gone up 80% from the April low. Now it's looking a bit mangy now, and there is one particular, they have their own NVIDIA that is an AI play that has gone up 300% virtually. It's called SK, South Korea, Hynix, HYNIX, and it's been one of the main drivers of the KOSPI, along with Samsung and its a third equity, Advantech, I think it is. I have to try to remember the name. So when the KOSPI sells off badly, we have shown you get contagion run on the USD Korean won. So the KOSPI has quite a high foreign direct investment. So if you get an AI collapse in America, you get it also in Korea. Korea is more vulnerable to it. It has a lot of foreign direct investment, and the money leaves the currency too. So KOSPI aggressively down, USD KRW aggressively up. Because of debasement in the currency. The money doesn't stay in South Korea. It sells out of the stock market and it goes back into dollars, Chinese won, and others. So this is particularly a Korean won weakness rather than just a dollar strength trade. We're seeing a halvening of the buying power of the Korean won. If you want to show the 3-monther, the quarterly chart, that takes us back to the Asian crisis in the 90s on the USD KRW, Kai. People will get a sense for that setup. There you go. That is in a breakout for major moves. And when it moves violently and it can go bidless. Unlike the yen where there's steady liquidity and you tend to grind consistently higher, this thing completely spikes. That is breakout central. We've had our 3 impulses. One was the Asian crisis. The second spike that is slightly less high was the 2008. You saw how badly the Korean won was hit. Divestment, money goes back to core. Korea very sensitive. Don't forget, it's a Western nation proxy. It's not a Chinese nation. It's not part of the BRICS. It's kind of like Japan, the vulnerable Western nations that out east, if that makes any sense. And then the third high came more recently. In and around, and we have actually run it there. That's it. You just nailed it. Shout out the date there, if you would, Kai. I think
that's September 1st, 22. So
22, yeah. So we have now broken that, and I'm expecting an absolute melt up. Now that is another rainmaker trade on a currency, which could also be expressed as a short on the KOSPI on an AI theme that most people would never have thought of. So those are how we're planning to build alpha in a forthcoming collapse that we think is not too far away, because the debt markets have started speaking and eventually the equity markets are forced to notice. So let me hand back to you.
The precious metals landscape continues to tighten as gold builds a controlled series of stair-step advances and silver accelerates into a far more aggressive structure. Gold's repeated bull flag formations indicate steady institutional accumulation, while Fibonacci projections point to primary upside targets near $4,700 and potentially $5,200 as capital rotates out of weakening equity markets. At the same time, silver's behavior reflects a market preparing for a high-velocity breakout, with near-term potential toward the 60s and 70s, and the possibility of temporary surges into the 80s as liquidity compresses. Broader technical patterns still hint at the larger, longer-term extensions that could reach well beyond current ranges once the next phase of volatility begins. Miners may follow this cycle with a sharp upside before eventually pulling back during the larger monetary reset. Let's get back to the interview.
When I look at gold, I think gold's going to end up having a very nice move here to the upside. I can share my screen and just kind of show you what the chart of gold is pointing to. So this is the daily chart of gold. It's had a series of bull flag patterns. So it has a big run up and then it pauses for a while, which is what you want. It has a big run up, then it pauses. We've had a nice run up and now it's pausing. So it's stair stepping its way up. This is more so a controlled move. You don't want really something that just goes parabolic straight up. Even though you could argue when you zoom out on this chart, it is a fairly parabolic move. But after this, if we were to use a Fibonacci extension, which is one of the most powerful technical tools I think you can use for charting, it will give us an idea of where the next upside targets are. And so we can just base it off the rally. So from the low over here to the high and back down. And this will tell us where kind of sentiment and momentum, kind of where the universe is going to more or less pull gold eventually. It is going to want to see gold up to about 4,700 somewhere, which is about a 15% move. And then it's going to want to go all the way up around 26% move to about $5,200 per ounce. So that would be the next move. And I think if the market is where I think it is over the next 2 or 3 months, I think we could see gold surge up to this level. I also think the stock market could have a very sharp sell-off going forward. So I think, as you just mentioned, I think there's going to be some rotation of capital. I think the stock market might start to sell off. And as money comes out of equities, it's going to look for a safe haven, somewhere to go that's working, and it'll be precious metals. And so that money is going to come out of stocks and just pile into the precious metals space. And as we know, the stock market is much bigger than the gold market. So when you've got trillions of dollars coming out of the stock market very easily, which is nothing, that's going to pile into the gold market and just skyrocket, shoot higher, because it's a ton of money for the gold space to kind of handle. So I think we could see a very strong, if I was to look at the chart, we could potentially see like some crazy parabolic move up into this $5,200 level over the next month or 3. So that would be like the perfect storm. To me, that would be the signature of precious metals are about to put in a top, including silver and platinum and palladium, and also that the stock market has already put in a top and that we're about to start something much bigger and uglier. I think both of these are going to require some piece of news. I think we're waiting for some economic data or something that's going to trigger more selling in the stock market. It could be in the US, it could be jobs data, it could be unemployment, something like that comes out that finally creates a big downdraft in equities. And of course, that will create fear, and money, when it's fearful, naturally wants to kind of move to gold. So we'll just have to see. We'll have to see what is going to cause that tipping point and when is it going to happen. I think it could happen in 1 to 3 months, but overall, yeah, I mean, this could drag out for a long time. I mean, I thought this, 3 months ago as well. So I thought this parabolic move that we were going, I thought it was going to actually continue to shoot and just go absolutely straight up. But now we're getting another step and a pause. So again, you just have to really follow the markets. Try not to pick tops or bottoms. Just understand you have to follow trends and let them mature and unfold versus trying to bend them to your will, right? A lot of people, successful traders, wait. You have to be patient. You have to let the trade unfold. You have to let it happen and come to you. You can't just do a trade because you want returns, right? That is the biggest two characteristic difference between a trader who's constantly hunting for trades and losing money versus someone who actually waits for charts to unfold and then moves into that position at the right time, lets it play out, then moves out. It's a very different game. The way I trade and invest, it feels pretty darn slow and boring, but it works exceptionally well versus, people who want to trade a lot and get that rush and that satisfaction of trying to have wins and gains, big gains, but have a whole bunch of positions. So you got to let this gold trade more or less play out, and it could take several more months still. Now, I do think silver could rally to like 61, 71, potentially actually blow off into the 80s. $80 per ounce over the next 1 to 3 months. I think it has this potential to go parabolic, but I never have factored in this cup and handle pattern. If you want to be really bullish, which is generally whoever's looking at this for silver, that could give you this pattern could give you a $150 to $200 silver, which is what everybody wants to hear, which is why a lot of people talk about this giant cup and handle pattern, I think, is because it can give you these giant upside targets. And I just kind of focus on one bull market at a time, because if you just look at this chart and you were to go to a fifth grader, anyone, you go, what happens after a spike, right? What's going to happen next? And everybody will say almost the exact same thing. They'll be like, oh, it goes straight back down, except for if you're in love with the commodity, you're going to be like, no, this is going to 200. So, it all comes down to a bias. Like, I strip the bias out. I don't really love I only like or love an investment when it's working for me and when it's moving up, and I could care less if I own it. If it starts to go down, I just get rid of it. And I only like what is in favor at the given time, right? So I think we could see silver have a very big move still. I think it could go up to the 60s, 70s, maybe go up into the 80s, but I wouldn't be factoring this cup and handle pattern. It just blindsides you. It makes you think there's so much upside that you're going to ride out, you're going to ride out 10, 15-year cycles to the downside where you lose 70, 80% of your value. And I don't believe in that kind of volatility for a portfolio. I think gold miners are going to still move higher with the rest of the precious metal space over the next 1 to 3 months. But I do believe they will come back down very sharply when we go into a financial reset. If we look at the gold miner juniors, let's just go back to the gold chart for a minute, and we'll just go to, I think we're going to go through something like this. So if we were to look at this chart, this is back in 2007. We saw the stock market peaked, gold put in a peak, and then it went into this multi-wave correction where gold pulled back 34%. And so I believe we're kind of right here in gold. I believe we've got one more push up, a couple more of these monthly bars push to the upside. And then I think we're going to have this big pullback, and that'll be the financial reset. There'll be all kinds of stuff happening. After it puts in a bottom, that is when we go into the big multi-year phase of a rally for gold. I believe this is when the miners will come to life. This is when the miners really came to life last time. It was after the correction, the juniors, the micros, all just went absolutely ballistic for many years. So if I was to just go back onto this chart, I'll show you where I think we are right now. I think we're going to see gold rally up. Let me grab a pencil here. And then we're going to see it go into a multi-month pullback. And then somewhere over here, after it's blown up, it's gone and hit these upward targets and pulled back. I think this is when you get invested back in the juniors and the mining stocks. And that's when gold, I think, is going to have the next really big push that lasts a long time, where we see that maybe the US dollar actually does collapse after we have this next reset. And gold becomes, the ultimate kind of reserve currency, or the ultimate safe haven from currency collapse. And that's where gold could go to 5,000, 12,000. Who knows after that? And that's when you want to get involved, I think, in the juniors. That's when they come to life, in my opinion.
The pressure building underneath precious metals is becoming harder for markets to ignore. Structural shortages in silver, intensifying global demand, and the emergence of new industrial requirements are all tightening the window before the next significant price acceleration. Gold continues to benefit from steady safe haven flows, reflecting a broader transition toward tangible assets as liquidity risk expands, and the equity cycle shows signs of exhaustion. These dynamics point to a maturing setup in which both metals could see powerful upside extensions once the next trigger arrives. As these forces converge, the landscape is shifting toward a phase where price discovery becomes more physical, more global, and far less tied to the old paper-driven mechanisms. The next move will likely unfold quickly, and staying prepared is essential as this rotation gathers momentum. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.